Check your 401k balance right now. Go ahead, look at it. Whatever that number says, Beijing has a weapon that could cut it significantly. Not with missiles, not with soldiers, with a simple decision to sell US government bonds. And here's the thing that should make you sit up straight in your chair. China is already doing it. Quietly, steadily, month after month. China held $1.32 trillion in US Treasury bonds at its peak in 2013. Today, that number is $688 billion, less than half. China has been selling American debt for over a decade. And in 2025 and 2026, it accelerated. This is not a theory. This is not a political argument. This is a documented, verifiable financial trend that connects directly to your mortgage rate, your retirement account, your cost of borrowing, and the stability of the economy you live in. Today, we are going to explain exactly what happens, step by step, if China decides to dump its remaining US bonds aggressively, and what it means for every American who has a 401k, a mortgage, or a savings account. What is a treasury bond and why does it matter to you? When the US government spends more than it collects in taxes, it borrows the difference by selling treasury bonds, IOUs that pay interest. The US has never defaulted, so they are considered the safest investment on earth. China became one of the biggest buyers. Now here is what connects this to your life. The interest rate on treasury bonds is the foundation every other American interest rate is built on. Your mortgage, your car loan, your credit card rate, all of it tracks treasury yields. When yields go up, everything else goes up with them. As of early 2026, US national debt stands at over $38 trillion. Approximately 24%, nearly $9 trillion, is held by foreign governments. China alone holds $688 billion. Japan holds over $1 trillion. If foreign holders sell aggressively, treasury yields spike and every American borrower pays more. What China is actually doing right now. China is dumping bonds. Holdings fell from $1. $32 trillion in 2013 to $688 billion by October 2025, down 47% from peak, dropping China from second to third largest foreign holder. In early 2026, Chinese regulators quietly instructed banks to cut treasury exposure further. The money is going to gold. China's central bank has been buying gold at a record pace. The reason? After America froze $300 billion of Russian central bank assets in 2022, China drew an obvious conclusion. If America can freeze Russia's dollars, it can freeze China's. Holding $688 billion in US Treasury bonds is not just an investment. In a conflict scenario, it is a hostage, and Beijing is quietly freeing itself from that hostage situation. Beijing is not selling US bonds because the investment is bad. It is selling because holding $688 billion of assets that America can potentially freeze or seize in a conflict is a strategic liability. And China is reducing that liability, deliberately, patiently, every single month. In plain English, here is what actually happened in April 2025 as a preview. The trade war with China was heating up. Suddenly, the 30-year Treasury yield surged at its fastest pace in over 40 years. The 10-year yield spiked at its fastest rate since the 2008 financial crisis. Multiple analysts pointed the finger at China accelerating its bond sales in retaliation for Trump tariffs. Mortgage rates started climbing in response, hitting American homeowners within days. That was a small taste. Now imagine it at full scale. Think of it like this. China shows up at a garage sale with $688 billion worth of stuff to sell, all at once. Suddenly there is too much supply and not enough buyers. Prices crash. And when treasury bond prices crash, interest rates shoot up. Your mortgage goes up. Your car loan goes up. The government pays more to borrow. And the stock market, seeing higher rates as competition, sells off hard. In 2022, when the Fed raised rates aggressively, the average 401k lost 23% in a single year. A China bond dump could trigger something similar, but faster. Both your stock funds and your bond funds inside your 401k would drop at the same time. And your mortgage rate, if you are buying or refinancing, would jump potentially overnight. The dollar also weakens. When the world sells dollar-denominated assets, demand for dollars falls. A weaker dollar means everything America imports, gas, food, electronics, costs more. So your grocery bill goes up at the exact same time your 401k is going down. why China hasn't done it, and what you should actually do. Here is the honest part. A mass dump would hurt China too. Its own $688 billion in bonds would lose value the moment it started selling. Stressed American consumers buy fewer Chinese products. And China's currency is tied to the dollar. A dollar crisis becomes a Chinese financial crisis too. So this is a weapon China would only fire if the relationship with America completely broke down. Over Taiwan, over a military confrontation, something severe. The gradual selling China is already doing? That is the real story. Not a sudden explosion, a slow bleed. Month after month, a little less. Replaced by gold. And it has been doing this for a decade already. Your 401k is not under attack tomorrow, but the architecture around it is quietly shifting. And the best thing you can do is stop assuming it cannot happen and start paying attention to one number, the 10-year Treasury yield. Look it up right now on any financial website. If that number starts climbing sharply for no obvious reason, bond market stress is the first thing to investigate. China held $1.32 trillion of American debt at its peak. Today, $688 billion. Still selling. Buying gold. Telling its banks to cut further. Not because the investment is bad, because in a conflict, those bonds are a hostage. And Beijing is quietly freeing itself. This matters to you not because your retirement account will collapse tomorrow. It will not. But because the interest rates on your mortgage, the value of your investments, and the price of everything you buy at the grocery store are all connected, through a chain most Americans never see, to what China does with a pile of government IOUs. China is not holding American debt as an investment anymore. It is managing down a strategic risk. And as it does, slowly, patiently, every month, the world shifts a little. Not enough to feel today, but enough that in 5 or 10 years, your 401k will have felt it. Subscribe and tell me in the comments. Are you worried about China's bond selling? Or do you think America is too big to be shaken by it?